The bad ideas need to be weeded out. It's taking the cancer out of the system. It's important that they die. It's a good thing that Luna went to zero because no one's going to do that again. That's the whole idea. You've got to scrape the patina. You've got to strip the Band-Aid off the wound. This is all good.
The crypto markets are in a bear market. There's no way to sugarcoat the fact that crypto markets are having a difficult year. Kevin OLeary believes the major dips in the market this week are just the beginning of a wider meltdown. If anything, he says the next fall for crypto will be much bigger. You don't get a bottom until you have an event, OLeary told CoinDesk this week. In the crypto world, we need someone to go to zero. While such occurrences obviously are positive for the players involved, these types of panic events define bottoms as markets capitulate before crawling out from their lows and slowly recovering, according to OLeary. On Wednesday, Bitcoin touched a years-long low of $20,000, tumbling nearly 27% in a single week and by 70% since its peak of $68,000 in November last year. Other cryptocurrencies plunged further, with Ether dropping to about $1,088, its lowest price in more than 2 years. In Canada, Wealthsimple Incorporated, which quickly became one of the leading crypto trading platforms in the country, said Wednesday that it is laying off 13% of its workforce because of market volatility. A day earlier, Coinbase Global Incorporated, one of the largest crypto exchanges in the world, announced that it will cut off 1,100 full-time jobs. Kevin OLeary claims that the crypto market has not yet seen the bottom and expects prices to fall much lower. Before we hear what he has to say, please like this video and subscribe to our channel if you are yet to do so. Thanks for watching our videos.
No, we're not. There's lots of precedents for this in history. To get a bottoming in an asset class, you need a major player to basically be offside. In the case of Celsius, it is going to go to zero. It's over-levered. It's gated now. And the trouble with gating, a good example would be a hedge fund. Every single customer wants to be liquid the minute you open the gate. And so it's a self-realizing outcome. It will go to zero. It'll have no assets. But that's important. It's not enough. It's not big enough. I'm looking for something bigger. Somebody out there is in trouble. We don't know who they are yet. We'll find out soon. It'll probably happen in the next 30 days. Some giant player is going to zero because this is the first time applying leverage to an asset class that most people assumed wouldn't be this volatile, but has proven to be volatile yet again. And I say all this, and it's important that this happens. It's bad for the individual investors, but in the context of making this market more educated, more institutional, more stable, with better price discovery and less leverage, you need these players to go to zero. So Celsius, thank you for your sacrifice. They'll go to zero, but they're not big enough. They're a small bit player doing something really bad, using leverage to offer 15 to 18% staking, which of course is going to go to zero. But that's okay, because now other investors, after watching what Celsius did or what Luna did, will not favor those structures. They will not put new capital to work there. Market's very smart that way. So by creating these events, taking these to zero, that gives you the, this
Terra
is a
Luna is like 60 billion, including UST. Terra Luna, they was 60 billion, and now they're at zero. That's a big player.
I know that sounds like a lot, but in the context of financial services, that is nothing. Even the entire, under $1 trillion crypto market is nothing. We need, it's really small in the context of where it could go. And so what we need to have happen, and the interest is, I was just, before I came on with you, I was just talking to institutional investors in the Middle East. There is so much interest in getting into crypto right now, and they can't do it because they have no policy and they're not compliant because they're sovereign wealth funds. And they don't have the option. They have no infrastructure for compliance to buy Bitcoin. And so they're really interested in, putting 1 to 3% into Bitcoin, which is the granddaddy asset, given that it's had such a price correction. They're very interested. And, what does that mean in terms of demand? Well, if you're running a $900 billion sovereign wealth fund, that's a lot of demand. And so we don't have that in the market yet because we don't have policy. So when anybody says to me, oh, we want to remain unregulated, they don't get the joke. We're going to stay small and tiny and fractional. Under $1 trillion of assets is nothing. It's nothing. It could be multiples of that if we could finally get some policy.
What do you think is structurally where things would be once this supernova event occurs?
Well, we need two things. We need that capitulation event, And I'm sure we're going to get it, and that's a very good thing, and I've given you the reasons why. It'll be chaos in the streets kind of thing. Bitcoin will probably drop down significantly. I don't know, maybe another 20% down. Who knows? It's impossible to know. But again, it's a good thing. It's the beginning of a bottoming process. Then we need one of these bills that's floating around Congress right now, and I would suggest the one that I'm most interested in is the simplest to pass. That's going to be the Haggerty or Toomey bill that contemplates auditing stablecoins, which is a really easy thing to do and would make it much, and if we just could get some policy on one thing and it was stablecoins, that would really be good, because you would start to know with certainty that you get some movement from the institutional client to allocate. And I'll give you an example. You mentioned WonderFi earlier. Yesterday, WonderFi announced, it's all over the papers up in Canada, that the TSX, the premier exchange there, invited them to list on the TSX. The first time in history a crypto exchange with a dealer broker attached to it has ever been invited onto an institutional exchange. And the reason they did that is there's so much institutional demand in Canada for product. There's a huge amount of demand, and the regulator in the Canadian market is a little bit more advanced than what we have stateside. The UAE is very advanced as well, Switzerland, England. These are other countries, Australia, where you're a little more advanced on policy, and these large institutional equity exchanges are asking to list the shares of these dealer broker crypto exchanges. So I consider that all positive, all positive. But I think right now we haven't found a bottom yet for crypto.
But Kevin, I guess my question is, why would this supernova event necessarily be good for crypto? Why wouldn't it just lead more people to be like, enough with this crazy industry, I'm going to go try to get a discount on a tech stock, or, you know, there's going to be bargains in the stock market as well. Why would it trigger more people to stay in the market? There's other options out there.
Because you have to learn from history. Great capitulation occurs around events. The long-term capital, the one I keep referencing, was the bottom of the market when that thing blew up. It blew up on leverage, and it was chaotic. I think we'll get a couple of hedge funds. If they're big enough, they'll be considered, you know, catastrophic events. And that's it. The market always goes on. If something blows up in crypto, it doesn't end crypto. The promise of crypto remains. But we really need it to get that bottoming process started. We're not there yet. We're in the slow grind down. Every day down another 2.5%. It's very painful to watch. What you want is that toilet to flush. Okay, if we have to go down 25% more, let's do it. And then it's a huge buying opportunity for those that have this stamina to take that kind of volatility. And then you reflect on it 18 months later saying that was the bottom. It's always around an event. That's all I'm saying. I'm just being a student of history. And it's going to happen. You will be reporting on it. You will be reporting on it. You'll remember this conversation. It's coming to a theater near you. The philosophy in our shop is we don't use leverage on highly volatile asset classes, whether it's crypto or whether it's, you know, small cap or venture stocks or whatever it is. We just don't use leverage because we don't know with certainty what's going to happen any one day. When you use leverage, as Celsius did, to provide those extraordinary yields for a short period of time, I think everybody went into it their eyes open, so now their accounts are worthless. That's okay. I keep saying it. It's a birthing thing. It's the beginning of a nascent industry. The bad ideas need to be weeded out. It's taking the cancer out of the system. It's important that they die. It's a good thing that Luna went to zero because no one's going to do that again. That's the whole idea. You've got to scrape the patina. You've got to strip the Band-Aid off the wound. This is all good.
What do you make of Kevin OLeary interview? Do you believe that crypto price will fall much further before it starts to rise again? What price will you predict as the bottom for Bitcoin? Please, let us hear your opinion in the comments section. Thanks for watching.